And in our top business story, as global Islamic finance assets amount to nearly $1.9 trillion US, and 80% of Islamic banking assets are located in the MENA region, experts in the Islamic banking industry discussed future growth opportunities for Islamic banks while also reviewing the legal regulatory frameworks. During a high-level forum in Dubai today, banking experts from the World Bank and the Arab Monetary Fund stated that less than 20% of the MENA adult population has a bank account, and over 25% of those excluded do not use formal financial services due to religious reasons, leaving a large pool of people waiting to be included into the financial market. As more than 65% of the MENA population is 15 years or younger, officials stress that Islamic banks should take advantage of the current global financial situation and expand their financial services to those excluded in the Arab region. Adding that mobile banking and SME finance offer growth opportunities for Islamic banks, experts also highlighted that concerted action is required in several areas, including enhancing risk management practices and raising public awareness, while also increasing the number of skilled professionals in the region. As a recent survey in the GCC revealed that 26% of Islamic banking customers use mobile banking, compared to 38% of conventional bank customers, officials stress that Islamic banks need to do a lot more as they face competition when entering into the global financial system. During the forum, it was also mentioned that Islamic banking markets have expanded from 7 to 13 regions globally between 2012 and 2015, and 9 of those are in the Arab region.
As you know, in our region, the Arab region, we have the highest youth among other regions in the world, and therefore there is a great potential for Islamic banks to fill in any gaps. And then we have a low penetration rate in a sense of number of accounts, in a sense of accessibility of the SMEs, and therefore there is really a great potential for the Islamic banks in this region to fill in gap, and also to be creative in terms of their banking products to fill in the needs for individuals, for small and medium business enterprises. That would really help the region also to be able to create jobs for the relatively high unemployment in our region. And therefore, we expect that the Islamic banks is going to continue growing. Right now, they are growing by higher than 10%. Internationally, this is a very high figure.
A lot of banking has now gone online. A lot of banking has gone onto mobile phones. But in the Middle East and North Africa region, you also discover that smartphones are being used more for emailing and for messaging rather than for banking. And there are some surveys that show that over 80% of smartphone users use it for email. But in terms of banking, online banking through smartphones, it's about 20%. This again lags far behind what you see in many other regions. Even in sub-Saharan Africa, where we've seen rates of over 70% of people using mobile phones. So we do think that this is an area where Islamic banking can be more innovative and more efficient by using online as well as smartphone technology to reach the underserved in the region.
More than half of UAE professionals are optimistic about future employment opportunities and personal finances. That's according to the latest study rolled out by Visa. The Visa Professional Study is based on responses from UAE citizens and residents from 18 to 55 who hold at least one payment card, and which showed that more than half of professionals believe the country's economic situation will improve in the next coming 12 months. UAE professionals mostly spend on entertainment, nights out and fine dining, while 90% spend on everyday things once a week, like groceries and household items, with the average overall spend as high as 11,000 dirhams per month. The study also showed that credit cards are more commonly used when buying big-ticket items such as luxury weekends, designer clothes and jewellery. It also showed that UAE professionals prioritise their children's education at 65%, spending time with their family at 57% and staying healthy at 52%. Younger professionals aged between 18 and 29 want to increase personal income and save for the future, and are also most likely to purchase products on mobile devices due to convenience, security, acceptance at merchants and rewards. Additionally, nearly 80% of those surveyed put aside around 6,000 dirhams per month for discretionary spending. The UAE continues to serve as a hub for business innovation, with a new study showing entrepreneurship as the highest growing job function year on year for LinkedIn members, and the country continuing to attract talent from the wider region. The number of LinkedIn members noting entrepreneurship as their core job function nearly doubled over the past year, according to a new LinkedIn report based on UAE profiles created and completed between March 2015 and March 2016. This increase was most pronounced in the professional services industry, such as tax advice, accounting consultancy or business consultancy. This was followed by the technology software sector and then the retail and consumer product sector. In addition, there has been an increase in the percentage of LinkedIn members in the UAE who have moved to work for smaller companies that employ fewer than 200 employees, growing year on year by 10%. His Excellency Hussein Al Nuwais, the chairman of the Khalifa Fund for Enterprise Development, was quoted saying that building an environment in which entrepreneurship can flourish is one of the key priorities within the UAE's wider innovation agenda. And this latest data from LinkedIn is further testament that the UAE is on the right track, and most importantly, that the public is welcoming such support with open arms. It's been announced through a MEED report that the GCC construction market is expected to recover by 2018. It was stated that the market is facing pressure from cuts in government spending, late payments, increased overseas competition and staffing challenges. However, a recovery is set to be helped by an improvement in crude prices to $60 a barrel by 2018, as forecasted by MEED. Additionally, by then, all GCC markets will have VAT imposed, adding at least $20 billion to government incomes across the Arabian Gulf. It added that national oil company restructurings will be complete and trade with Iran should have recovered, while the UAE will be looking forward to Dubai's Expo 2020. Officials stated that a lack of liquidity is the biggest issue within the construction industry at present. However, this could lead the market to reinvent itself through financing projects through public-private partnerships.